Good morning, friends. This is time for the trade plan for 12th of June 2020. Now, overnight, uh, the US, the Dow has fallen about 1800 points. Similarly, the S&P 500, even that has fallen, uh, possibly about 200 points, closer to about 3000. So it should be rough for our markets. The surprising thing is that now US is worried about the increase in coronavirus cases, and our market is also worried about the US increase of coronavirus cases. Just a couple of days back, I had said on Facebook that market has to take cognizance of the rise of coronavirus cases in India. Well, now you know what logic our market operates on. We are purely following the US markets. Uh, Anything that happens here is not really paid attention to. Well, having said that, yesterday I had mentioned a head and shoulders pattern which was developing on our charts. So basically, let me show you what I was talking about. I was talking about uh, some sort of uh, intraday patterns which are now developing. So let me go towards my intraday screen sharing, and this is the head and shoulder I was talking about. So let me just annotate for you. How do I get this here? This is the head, and this is your shoulder. Okay, and this is your 99.50 neckline. So basically, the target of this head and shoulder is 10,300 to about 99.50, and add these sort of 350 points on the downside, and the target comes somewhere closer to 9600, which it appears that we will cross at the open. Okay, so this way, the targets have been met fairly quickly. Now, let's go back towards our uh, spreadsheet that I like to share. So let me just clear all of this and go to the spreadsheet. Okay. Now these are the Tamborrada levels for the day. The support zone here is 97.70 to about 98.33. Resistance comes in at 99.55 to about 100 and to 10,017. 10,117. Now, yesterday we opened below the H3 of the situation, and hence we got follow through on the downside. Today, not only are we going to open below L3, chances are we will open way below L3. So today will be a tricky day. The reason is that if you short at the open, the market can move 100 points against you. But today, I think the market will possibly exhaust at the open, and maybe with that sort of a large gap, you have two choices. A, do not trade. B, maybe try to buy at about 9,500, 9,550 for a intraday trade. Now let's look at uh, you know the bank Nifty's levels. The bank Nifty for the day, you have support at 20,000 and 20,289. You have resistance at 20,727 to about 20,946. Again, chances are you will open with a huge gap down, and I don't think post that a short trade would be viable for the compulsive traders. You could have an intraday long trade, of course use stops, but this kind of a massive gap finishes opportunity on the short side. Now I am interested in what could I get from this from a bit of a positional type of perspective. So from a very positional sort of a perspective, what I want to do is, I want to wait for the market to exhaust, and it may not exhaust today. Now let's focus on uh, this area here from 9,000 when we had started to move. So let me show you what I will look for. What I am interested in looking for is, you had a downside, so my buy stop was here. Then my buy stop was here. After that, my buy stop was here. And then my buy stop was here. So each time I get a lower high, I am moving my buy stop down. Finally, this green bar crossed the previous day's high. So that was an indication that some sort of exhaustion has started to happen around this 8800 zone. Okay. So what you did was you waited, the market came off, and again it took the previous day's high out. Now, why didn't I enter here? I did not enter here because a second crossing of the high is what shows you genuine strength. Again, out here, if you see at 70, at this 7500 zone, you were coming down, your buy stops were above the highs. It crossed high first time, then it went down even further and even further. The second crossing of the high was your signal. Let me explain again whether I want to buy or I want to sell. So here, let's assume that you have a sell placed at the lows. Okay. So this is a mistake. Then you had a sell at the higher low, then at the higher low, then at the higher low. This was the first signal. First signal you ignore. The second signal, if you took here, it started to work in your favor. So what I have seen is that, see, this is a market where, it's impossible to talk support and resistance levels without some sort of an objective methodology. So the best way of getting onto trades is that when you get your second sell or the second buy, that is where you start building up your positions on the option, and then you are able to get into these large swings. Okay, so that basically is a nice strategy. Do not get into the first crossing of the previous high. Wait for the second crossing. It may be lower or it may be higher, like it is shown here. So this is a technique where you should be able to enter these 800 to 1000 point swings, which you get routinely. So my buy stop for the day is yesterday's high, 10,100. That obviously will not come. So chances are today the positional guy will not be able to get any sort of signal. Okay. So today you may not have that sort of opportunity. Similarly, on a very uh, day trading style perspective, you have a 5-minute chart. Let me see how I can open this. This, technology. does not oblige me very often. Okay. This is your 5-minute chart. So this was the congestion we spoke about yesterday. Okay. Now today, since we are going to open, you know, very, very far away from, this point, yesterday's close. So post the open, I would expect the market to get into some sort of congestion, and that is what will make your life difficult, because this kind of congestion, chances are you will open around here, and after the open you will have some kind of short covering which could be about 100 points. So you may get back towards, the upper end of your congestion. And where could that congestion lead you to? That could lead you maybe to about 9650 to 9700. Do not get sucked in if you cannot be nimble. Today is not the day to buy positionally. Okay, so just keep that in mind. A lot of people think 9550 is that great level to buy. It may finally be, but that we need to find out. It is not clear whether today itself at the bottom you should buy, because we could have more downside. So like here, this is, let me get across here. This is 9635. So this is about the level 9635, 9650, from where post the open you could have a small intraday rally. But remember, it is likely to be only an intraday rally. US futures are right now up by 200 points, but I would not worry about them. Basically, you know, if you draw a trend line from 7500, this trend line comes at about, you can say, about 9600. So we are going to open below this zone. Okay. So chances are we may go back, retest this trend line, and then have a further decline. Short point do not trust any sort of intraday rallies today, and draw this trend line on your chart so that you are able to see the retest and see the game on the short side after 700 points of decline is probably done, other than an intraday type of trade. So what I am looking to do is, on a positional basis, I am looking for opportunity to get long, may not be today, but on an intraday basis, post whatever intraday rally you will have, I would doubt that the early morning low which is formed, that will get taken out very easily. So as far as I am concerned, the intraday trade may be on the upside if we really open hard around 95.50. Intraday trade is not on the short side. Positional trade is not there for the day. On the upside, if you have to go short, then look for opportunity of shorting around 96.50. But overall, with these sort of huge gaps, it will be difficult to do things. My sense is we should make some sort of a congestion zone, and from there you'll have to take it, because chances are that most of the short side will get done early in the morning. That should be it. Take care, trade well, and do not get into sucked into short positions at lower levels. That could be fairly detrimental, because if US futures recover further from here, chances are you may see a bit of recovery also. But overall, the market in the US as well as here has weakened substantially. So I would not think that a great amount of upside is now likely. Let's see if we can get up the US market charts, S&P 500, and see what is going on out there, since now we have the facility of opening up charts. If you just bear with me, let me just set it up. From tomorrow, I will set it up before I come here. So let's see if we can get some sort of a daily chart. S&P 500. Chart. Okay. Let me share your screen, which is this one, and this is the S&P 500 chart. Now, basically, we are looking at 29.55, which is the first support, which is hardly 50 points away from here. So my sense is that while we could pause here. I mean, look at the size of this bar. Okay. This is massive. And, this sort of fury on the downside will not go away so easily. So my sense would be that possibly S&P 500 will come down to this zone to consolidate. The downside of this zone is about 2750. So very likely we come down to 2750, and then we kind of look towards bottoming out. If I try to draw a moving average, so this is the 9-day moving average. Earlier we have come below 9-day moving average and then have gone back above it. So the idea is that this time it is possible that we go towards the 20-day moving average, which is closer, which is also around 3000. So below 3000, what you'll get is, uh, more downside. So S&P 500, you will now get back above it, above 20 DMA before you get long. So again, on the S&P 500, we can use the same sort of method that we are using on the Nifty, where my buy stop is here. So each day I keep putting my buy stops lower and lower and lower on the S&P 500, and then on the second hit, like here, this was first signal. Okay, this is the second signal. So what you are doing is not trying to enter here, but your second signal comes here where you get a further sign of strength. Similarly here, you are not entering on this signal, you are entering on this signal where the second bar crosses. The problem with buying the first signal is the next bar could take you down even lower. See, while some people will say, why should I miss one bar, etc. But the issue is that if you get a lower bar than this, then your trade fails. So wait for reinforcement of strength before you do that. So like here, if you wanted to take a short trade, you keep putting your sell stops at higher and higher levels. First signal, ignore. Second signal, that is the one you take it. So this is a fresh methodology that I am telling you that will often put you in trades which are much more genuine than the average trade. So that should be it for the day. Can you use this methodology in intraday trading? Sure you can. See, the issue is very simple. You risk one to make three or four. So it does not matter whether you use it on a 5-minute chart or a 15-minute chart or an hourly chart. In all sorts of charts, this is going to work. So the whole idea is to do your risk management and money management properly so that you stay ahead. That should be it for right now. Take care, trade well, and please consult your financial advisor.